Welcome back to Market on Close. It's time for Options Corner. Kevin Green, senior markets correspondent here on the network, joins us for that. So Kevin, when it comes to, first of all, thanks for joining us. When it comes to open interest with S&P 500 options, what are you watching? What's on your radar?
Yeah, it changed up a couple of levels here today after the expiration yesterday. We actually updated another one for the downside, that negative gamma area. So right now we are seeing a little bit of a widening out when it comes to the upside potential for this stock market here. And we actually have 5,800 as our positive area of resistance that we could kind of look at for the next couple of weeks. And the intermediate area of support, which we would like to hold, is 5730. Now, right now, we're actually below that level, and that's because of that sell-off that we had today. We had an event, obviously, that was kind of unforeseen, and so we did see a little bit of uneasiness when it comes to the equity markets. But once again, having that 5680 level, that was actually a key area of support here for today. We actually touched it close to around 2 times here before actually bouncing higher, and now we're trying to contest the upper end of this channel line here. Going into the close, I think it will be kind of interesting to see how the market actually does hold up here, Caroline, just because of the intraday volatility that we've seen and somewhat of a comeback. I mean, we're still down 3/4 of a point right now for the S&P 500, but we have had a pretty decent relief rally that may continue going into the close.
Yeah, so talk to me about, in terms of what we're seeing with the VIX, because we have seen quite a bit of volatility and I would say a pretty impressive comeback. I mean, yes, we are still lower, but the losses have been cut in half.
Yeah, definitely. So on an intraday basis, when you have a situation like today, a lot of individuals actually look at the VIX as a gauge of risk within the market, right, or uncertainty. But one key area or one key thing that you can actually look at is the VIX minus the VIX futures, which is going to be /VX. So when you kind of look at that on an intraday basis, you can kind of see when this kind of close to backwardation taking place, which just means that the VIX is actually trading higher than the forward contract or the futures contract. We never actually had a backwardation for today. We got very close. And when that does occur, that just means that there's more uncertainty about the near-term risk in the market than we are worried about further on in time here. So we had 2 times today where basically we got really, really close to that backwardation and then kind of eased back into the normalization, or what we call contango. And that is actually, once again, kind of almost one-to-one correlation to the S&P 500. So I just wanted to bring this up here for today for those intraday traders that are kind of looking at the VIX and may be wondering what level is really heightened volatility, what's low volatility. And that spread actually allows you to see exactly how geopolitical risk or an uncertain event can be priced into the market and where to see potential tops in the market as well as potential bottoms.
Okay, so just to be a bit more specific in terms of what are those levels for extreme volatility, heightened volatility?
Yeah, so if we kind of go back to that chart here today, we had the VIX minus the VIX future was sitting at around 0.2. So that just means that the VIX negative 0.2. So that just means that the VIX future was still priced higher than the current VIX. We were never in a backwardation. But as that spread gets smaller and smaller, that just means that the heightened volatility or the uncertainty of near-term risk is higher and higher. And as that spread widens out, which is symbolized by that red line going to the downside there, that means that there's more normalization, or basically that event risk is being taken out of the market. Now, it's not fully taken out of the market, obviously, by any stretch of the imagination. We probably will have other events that occur here in the near term, but that just kind of shows that the market's kind of already now bracing for the next move to occur within this conflict that we are seeing overseas. So that's really the levels that we're kind of talking about. If we want to go to that volume chart, we can kind of go into what to look forward to going into the close. I think a key area that we've had on the radar for a very long time is going to be 5,700. Now, we are pretty much going to be testing that or close to testing that right now. We're sitting at around 5715 with a balance area sitting at around 5708. So right now we're still in like positive gamma territory, meaning that the dealers are still not really feeling the pressure. But if we see a rapid crash below the 5,700 level, that would be a little bit of a cause for concern for the close into today. So you'd like to see a bounce at 5,708. If not, see a bounce at 5,700. And if we don't actually hold that, then that's where we can continue to see a move to the downside here. But I would say that the event risk for now, the event risk is now being more appropriately priced into the market moving forward over the next couple of trading sessions until we get a response from Israel.
Okay, so just quickly, in terms of those levels, because I need to remember this for the next time I talk to you, 5708 to the downside or 5700, and then 5730 to the upside.
Yes, for today, 57. I have 5740 on there. That's the actual true line that we may see resistance. But 5730 is where we have actually seen a lot of flows coming into the market as far as call sellers right now, at least over the last 30 minutes. So I wanted to make mention of that. But yes, you would like to see 5708 hold. That would be ultimately a win for the market here today, even though we are negative on the session. That would kind of give us a little bit more breathing room that maybe we can recollect ourselves and then try to push higher. Maybe the Nike earnings can do that as well. Anything that's below 5,700, I would be a little bit cautious of going into tomorrow, where we have the ADP report coming out, and that has been a print that has been fairly volatile for the market. But once again, a really nice bounce off of the lows. Let's stay away from those lows as much as possible for the next 24, 25 minutes to go.
Okay, so you make a good point. Tomorrow we have ADP, of course, leading up to Friday's jobs report. Of course, Thursday we have initial jobless claims too, so it's appetizers and then the entree on Friday. What should we expect to see in terms of volatility leading into that?
Well, the ADP report has been telling, let's say, a little bit of a different story. It has been a little bit more weaker when you're looking at the trends or the analyst expectations. So if that trend is going to continue, yeah, we could see some volatility in the market. And that's really just based on the fact that the market might be a little bit more concerned when it comes to the labor market in general. And so if that weakness is going to continue there, then that's where we can obviously maybe see some downside pressure in the markets. But once again, that jobs report on Friday can erase any type of uncertainty that we get from ADP. And then kind of looking at the ISM manufacturing data today, it was weak when you're looking at headline, and it also was weak when you're looking at new orders, but the prices component was going in the right direction for the Fed. So I would say X the geopolitical risk that we saw in the market here today, we may have been able to digest that a little bit better. And I think that's another reason why we haven't seen just a complete flush in the market of a 2% down day, 2.5% down day yet, because for the most part, the economic data has been able to hold up.
Okay, we'll leave it there. Kevin Green, see you a bit later in the show. Thanks so much.